Welcome everybody to Trades of the Week. Myself, Marcus de Maria, and Keith Sullivan are going to take you through what we're getting into and out of and sharing our results. Let me tell you something. The stuff that is happening, especially in cryptos right now, with FTX swooping in. I'm not going to, well, okay, they bought Voyager assets, but also what's happening with Apple News and the Ethereum merge. We know it went very well, but... ... Watch this space because very, very important indeed. And we got some interesting Ripple news and lots of stocks we're getting into. So let's get started. By the way, the Facebook group.
Yes. So what we've got is an amazing opportunity for you to join our I Am Insider Facebook group. And with this, we give you so much content. We give you what stock we're looking at for the week. So stock of the week, crypto of the week. We look at the top gainers and losers. It's a platform for you to ask questions if you are not a member. And we also do Facebook Lives, which we are going to be doing, I assume, this week, I think. And with that, it's another hour session where we answer your questions. And we do that around once a quarter. So somewhere in the description below is going to be a link to join our Facebook group. And just join it. It's an amazing opportunity, amazing community that we're building. And you're going to get a lot of utility from it, a lot of free content. It
sounds like a lot of value, a lot of utility. Yeah. So this is probably going to be very expensive. Okay, so how much does it cost?
Nothing. It's completely for free.
It's free. Make sure that you do get onto that right now. Absolutely incredible. You will not regret it. You're going to love it. Take us away, Keith. How are we doing with the Buffalo?
Okay, perfect. So if we have a look at the Buffaloes, the first one that we're looking at is the Chef's Warehouse, so CHEF. Unfortunately, we had got stopped out at 1% loss here, which is not a moo, it's a boo.
Boo.
LRN, we got stopped out at 2% profit on this one, and this is the importance of moving up your stop loss as the market is going. So that one is a moo. So moo.
Moo.
TAP, we had a 1% loss. As you can see, market's just broken a lot lower, so that's another boo.
So, but that's good. So that's why I know it's a loss of 1% on our entire portfolio. However, what's so good about that is, of course, we want to get out. That's why the stop loss is there to stop further losses. Because have a look, if we wouldn't have had that there, and like the gentleman I met years ago in Norway, who after I explained the stop loss to him, he goes, "Oh, that's what the stop loss is for. As gold went down, I kept moving my stop loss down, and he kept moving his stop loss down. You never move your stop loss down." Oh, that's so funny. So that's the idea of a stop loss, right? So you don't make more losses. So we're happy.
Correct. If you have a look, PCG as well, this one we had a 1% loss. It literally just triggered our stop loss and then fell down.
No way.
Nature of trading, unfortunately. Cake, we've moved as you see, we're at a 1-to-1 profit with our stop loss. It has moved further lower, but we haven't had enough profit to move our stop loss the next step. HAL, so Halliburton's company, we had a no trade here. As you can see, the market didn't come up and trigger our stop order and just fell a lot lower. So we've cancelled our order here.
Yep.
And Shake Shack, we are slightly in profit on Shake Shack. We've seen a bit more of a pullback, but it is looking good here for a hopefully a bit of more profit.
All right, so before we go into what we're looking at for this week, making sure, of course, that we're long and short, Keith, let's have a look at what is happening in the economy.
Yeah, so interesting week in the economy as we...
Interesting. See what you did there?
Very interesting. Okay, leads in. No, so as you saw the pun there, we have seen the increase of interest rates for the Federal Reserve for this year. Once again, we expected a 75 basis point hike, which is 0.75% increase in interest rates. And guess what? We received that 75 basis point hike. So if we expected that to happen, why did the market have a fall? And that is just because there's still uncertainty. There's still leverage for the Federal Reserve to carry on increasing interest rates as hawkish or aggressive as they would like. Now, why is that a problem for the economy? It affects everyone in the economy. The higher the interest rates go, businesses lose margin because they're paying more back on their current liabilities, they're paying more back on their debt. And then we're seeing individuals who have mortgages paying more back on their mortgages if they have a flexible rate This is why you want to try and get a fixed rate mortgage. That's not advice. But we're also seeing individuals who have debt from banks, who have loans. They're paying more back on that as well. So it is affecting every part of the economy. Now, why is the Federal Reserve still looking to increase interest rates? Number one is because inflation is still relatively high. We have seen a deceleration, meaning it is slowing down and beginning to decrease, but it's still just too high. And on the other side, because it's all negative, all doom and gloom, but the employment area of the US market is still looking relatively strong. Jobless claims is relatively low. New job creations via non-farm payroll is increasing. So the employment is looking strong. And that is what's given the Federal Reserve a foundation to carry on being aggressive with interest or increasing interest rates. Now, what does that mean for us?
At last.
There we go. So what does that mean? And it basically means if we are trading, we want to be more short bias because we're expecting the market to push lower. And if we are investing, we want to make sure we're liquid enough with our investments, but not just being liquid, because being liquid is well and good, but it's finding the right companies to invest into, being the hedge against what the economy is doing. And naturally, in a recessionary environment, the hedges that we see is consumer defense companies, we see beverages companies as well, and we also see healthcare companies. Normally is the hedge against the recession, and once again, commodities as well. But at this point in time, we're not really seeing commodities outperforming what the market's doing. So that is everything that we want to be when it comes to our investments and trading, being hedged. So short bias more and also being hedged with our investments. And the last bit of news which could cause the market to have a bit more of a drop this week is PCE is coming out, which is a leading indicator for the Federal Reserve on inflation. And once again, if that is still showing high inflation, we then know the Federal Reserve are still going to carry on increasing interest rates. So that is it for the market update. Yeah, not too much.
So here's my question. Can you just once and for all explain to me, when you say they're hawkish as opposed to dovish, right? For me, a hawk dives down in order to snatch its prey, right? And when I think about a dove, I think about startling a dove and it flies off.
Yeah.
So is that it? So hawkish means down.
No, so hawkish actually means going up.
Well, exactly.
So when
that's my point.
You've got to think of it as when they're in the tailwinds, because what do hawks do? They ride upwards trends, right? They ride the heat to actually go higher to then swoop down and catch its prey.
Right, and the dove?
The dove just
you have no idea. No idea.
The dove, I don't know.
I want you to find out and explain to it, because when I think anyway. All right. So anyway.
But that's what they're doing. So long story short, they're being aggressive of increase.
I get that, but I think it should be the other way around. But anyway, okay. So let's go now to yes. What are we looking to get into?
We have our first opportunity, which is CHRW, CH Robson's Worldwide. We have seen the stock being upwards trending since February. So we've seen high after high. So the more the market makes new highs, the stronger the levels.
This is a good ratio as well. Look at this.
Really good ratio.
Remember, I mean, what we're generally looking for would be nice to have a little green candle there and then get in above that high so that the market takes us in. But then we'll have a 3.8, so almost a 4, a 1 to 4 ratio, which is absolutely amazing. Should we turn to, because there's a lot going on in cryptos.
Correct.
Right. So any positions you want to look at?
So in regards to cryptos, we haven't had any new entries in our current positions, but we are looking at 3 new opportunities. I think we kind of discussed these last week, if I remember correctly. So we had FTT.
Good. Look, I'm glad you said FTT, because I'm going to go straight in with some of the news here, because FTX, so the company, and this is the coin, FTT, so FTX, Voyager, another exchange, was liquidated and selling their assets. And guess what? FTX swooped in, is that a hawk? Is that a pigeon? All right, okay. So swooped in and basically bought the assets. And I'm telling you, FTX is just picking stuff up on the cheap, left, right, and center. So their young CEO, what's his name? Friedman, what's his name? Friedman's Banksy, something or other?
Not Banksy.
No, not Banksy. And he's basically just, taking advantage of what he considers to be a sell-off. He's got like a war chest of over $1 billion. I think he's about 30 or something. So he's doing extremely well. And I think for me personally, I am personally going to pick up some more of these FTT coins for sure.
Correct. And we're down around 72% from its current high as well.
Yeah, absolutely fantastic.
Looking good. And actually, the company itself does quite a lot. They're introducing stocks trading on the blockchain as well.
Aren't they doing something with Robinhood or something?
I think something was discussed about Robinhood. I'm not sure. I don't really like Robinhood, if I'm honest.
Either.
Because
because of what they do.
Yeah. But obviously that's a small
good
part
name,
of the
though.
business. Yeah, it's not bad.
You'd think they were doing good things.
But in their eyes, they're doing good things. So we had FTT, Decentraland. I know we discussed this last week. 88% down. One of the first metaverses that has been created.
I prefer Sand to Decentraland.
Sandbox?
Yeah, I do, yeah.
Okay, so we've got that, and also, as Marcus said, Sandbox, which is up here. So Sandbox is around 84% down as well.
Which is down here, not up there.
Down here. And then we had Stacks, which we discussed last week as well. So there's no real new opportunities for us to invest into, because we are pretty diversified, if I say so.
But for people who are starting right now, do your own research, because boy, are there some amazing opportunities to be had. Starting with Bitcoin, which obviously is at around the 20,000 mark, and came down from 68,000. There's lots. I mean, let's talk about the number 2, Ethereum, for just one moment, because obviously the merge, which everybody was talking about, it was a real case of buy the rumor, sell. Was it? Buy the rumor, sell the news.
Correct.
Absolutely incredible. Played out absolutely incredibly. And so that's come down, down, down. Although the merge was successful. And listen to this. Going from proof of work, the miners making sure that, they're doing the mathematical model, but using a lot of electricity as a result, but proving that they're doing the work. And then they get the Ethereum, right? Moving to proof of stake. Guess what's happened?
What?
99% reduction in power, which there's been a lot of criticism against cryptocurrencies, right? A lot of my friends have attacked me about that as well. I'm like, no, I'm not doing it. And by the way, one of them actually mines Ethereum. So what the hell is he attacking me for? I don't even do the mining. So they're attacking because of the generation of so much, waste of electricity. And this has resulted in something like, is it a 0.2% worldwide reduction in electricity use as a result?
Something around that, which is pretty not bad at all.
Sounds pretty small, but sounds pretty big as well,
on the
worldwide
scale,
production.
yeah.
So look at that. So cryptocurrencies is moving towards being much greener. So if you like that, Ethereum is good. And also the merge has helped. And one thing that our research department said, make sure that you do mention this, that this blockchain, Ethereum, on which all the apps are being built, obviously the D-apps, the decentralized applications are being built, is like having a slice of the internet. Now, back in the 90s, obviously you couldn't buy a part of the internet, but now you can buy a part of this blockchain. For me, that's the biggest selling point, and it could be that Ethereum will be the first blockchain that is actually profitable as a result of this merge and move towards the proof of stake. So that is something to do your research on. Remember, subscribe to this channel. Do that now. Hit that button. Why? So you can use us as a springboard to do your own research. What are we looking to get into and why? And then you can start doing your research, which is amazing. Saves you so much time. Go ahead and do that now.
And I think with Ethereum as well, with what they're doing with the merge, it's a lot more sustainable as well. Only challenge is, they've come into the forefront of the SEC's view, right?
The what, sorry?
The SEC.
Oh.
The SEC.
Okay.
Don't know what you heard.
Where you were going there.
But no, so now obviously going from proof of work to proof of stake,
right.
It's like they're getting some level of derivative, right? Some level of dividends, for example. And a lot of the stakers are based in the US. So now the question is, has this changed Ethereum to become a security?
I mean, this is ridiculous.
Which is a challenge.
If the SEC says that Ethereum is now going to be security, that will be a big, big, big problem, not just for Ethereum, but for all the other cryptocurrencies. While talking about that, just very, very quickly, on the Ripple news,
big news.
Ripple has performed extremely well. XRP, as you know, is being investigated by the SEC because they think that they are actually not a utility token.
No. And one of the biggest reasons, I've done a lot of research with XRP. It's one of my favourite coins.
Biggest fan, yes.
But
it went up, 40%? Like in one day?
Over 60% over the week.
Okay, over the week. Mm-hmm.
But XRP has basically come out and said, when we have sold XRP token, there's no investment contract, meaning there's no post-sale obligation from Ripple itself. So now what does that mean? It just means that they don't have to do anything for the holders. They can get rid of XRP and put XLM, and the company will still run the same. And
XM Stellar Lumens? Why?
Yeah, that's just the example they've given.
Okay.
Because there's another payment method. Now, if you have a look about that, is a security always has an investment contract attached to it, where there's a post-sale obligation. Now, without this investment contract, is now this being classed as a security in the eyes of the law that the SEC have written down? If no, and the XRP wins the case, SEC is going to have a very hard time going against any other cryptocurrencies because they can all just use the same claim.
Let's
and
make
there's
sure
no
that
win.
happens. Let's make sure. Well, we will see. We will. But it is a good idea. I don't know about right now because it's just gone up 60%, but it's still down massively from its highs back actually in 2017. It never went above that, whereas every other coin has, obviously because the SEC. A couple of other things in the news here, very, very bullish, is Apple previously didn't allow developers of apps, and these aren't decentralized apps. This is Apple, so this is in the real world. So apps that were selling NFTs or cryptocurrencies. Well, guess what, Keith?
What?
They have now allowed developers to sell NFTs inside of their applications. This is massive news if you think about it. A big company, global company like Apple allowing this it's a bit of a changer. By the way, just so you know, Disney also is looking into NFTs and DeFi, and that makes total sense with Disney. Think about all the cartoons, think about all the princesses and princes and frogs, and don't know why that came up, but all of that they can turn into NFTs. I mean, Disney is one to watch out for Web3 for sure.
100%.
Yeah.
100%.
Do you own Apple?
I own Apple, yeah.
Do you own
Apple's
Disney?
second investment. Disney, no, I don't own Disney yet. So
You
you own
own
Disney,
Apple.
I own Apple. So now it's whoever's going to win.
Well, it's obvious who's going to win.
Yeah, Apple.
Apple, yeah. That's true. Okay, good. So that's the news on that. Any new one that we're getting into?
So in regards to the VCA strategy, we have 3 new entries that we've taken.
Okay.
Our first one is CTSH, and we entered previously at 25%, and now we're currently down at 35% for our
second entry.
Correct.
Make sure, well, according to the strategy, invest a little bit more money as well. Get that average price down. Very good.
As low as possible. We also have CMCSA, Chromecast Corporation, and entered first time at 36% drop from the current high, and now 46% as our next entry. And then we also have Dover Corporation, where, as you see, the line didn't actually play out. So
Right. I love that because in trading, it's either going to go up or it's going to go down. Yeah.
Correct. So with Dover Corporation, we didn't see it go higher than 24%, and it dropped to 34%. So we've had our next entry there. So that's it for the VCAs. We do have a new opportunity, which is EMN, Eastman Chemical
Company.
Company, that's the word.
A global specialty chemical company that produces a broad range of advanced materials. Now, do your own research because let's have a look at the fundamentals
it's
here.
Down at 30% from its current high. Now, fundamentally, good market cap, good income. A fairly valued PEG ratio.
Fairly valued at around 1, right? If it's below 1, it's actually undervalued. So this one is fairly valued right now.
Correct.
Okay.
We've also got relatively high debt, but it is getting better longer term.
That is high though.
Yeah, it is high, but it's getting better. We see 78.5% growth in earnings per share, which is reflecting revenue and net profit. So they are making money, and 10% next year. Good institutional ownership, and then we've also seen good return on assets, equity, and investment.
Okay.
So overall, good company, coupled with our lunchtime trader book at the bottom.
Wow. Download your free copy today, which I'm sure you've already done.
Perfect. So with EMN, down 30%. So we have our first entry here, and then we're going to enter at 40, 50, all the way down to 70%.
And it's actually from its, I don't know its all-time high, but the high here is probably close to
around 45%.
Okay, so do your own research. Make sure you do that. But as always, use us as a springboard to do that. Okay, so let's have a look at the results. Okay, so the stock market results. Now, unfortunately, even though we had 2% gain, we had 1% losses. And so we're going the wrong direction here with the Buffalo. Right? After about 2 years, we're up 62% on our entire portfolio, which it's not bad compared to what you get in the bank, which is not a lot. However, in our defense, okay, this is non-compounded. If you were to compound, this is just, adding, 2% here, 1% there, 3% there, etc. If we were to compound that, that would be a lot higher than 3% a month, which we are actually going for in our defense.
Yeah, 100%.
Was that a good argument?
That was a great
That was a
argument.
good argument. Okay, on our VCA, 1,076% on the money invested, and on cryptos, that hasn't changed, still 1,500. On the CCA and small caps, 4,320. Now make sure that you do learn these strategies so that you can get these kind of results. Subscribe to the channel so you don't miss out. Use us as that springboard to see what we're looking at, getting into and getting out of. And we look forward to seeing you next week on Trades of the Week.